Hello everyone and welcome back to the channel. And with the new tax year starting very much soon on April the 6th, I thought this would be a perfect time to talk about cash ISAs, what they are, why this date is so important, and why this year in particular is slightly different compared to the normal. A lot of people don't realise how useful this ISA allowance is and can be, and every year 1,000 people lose part of it simply because they don't use it in time. In this video, I'm going to explain what a cash ISA is, why April 6th is so important, why the rules are changing very much soon, and when a cash ISA can be very much useful. And we're going to compare it to both the savings accounts and stock and share ISAs. So if you want to make the most of your money this tax year, this is definitely something worth understanding and watching. And if you do, leave a like, hit the subscribe button, comment down below what you want to see on this channel, and hopefully you guys are going to join a cash ISA as well. So what is a cash ISA? Well, first of all, a cash ISA is basically a tax-free savings account, which is good because we like tax-free stuff, which basically sits inside a government ISA allowance. It works very similar to a normal savings account. You put money in, the bank pays you interest, and you can usually take your money out when you need it, depending on the account type. The big difference is the tax treatment. With a cash ISA, the interest you earn is never taxed. You don't need to declare it, and withdrawals are completely tax-free, and it counts as part of your yearly ISA allowance. This means that as your savings grow, you keep 100% of the interest instead of losing some of it to tax. For small balances, it might not seem like a big deal, but once you start saving more money, the tax savings can really make a huge difference over time. Why is April 6th so important though? Well, April 6th is one of the most important dates financially in the UK because that's the start of the new tax year. Every new tax year, you get a brand new £20,000 ISA allowance. This is the maximum amount you can put into your ISAs in that year. That £20,000 can go into cash ISAs, stocks and share ISAs, or a mix of both. Mainly, I like to use a bit of both. But the key thing a lot of people forget is this. If you don't use your allowance, you lose it. It does not roll over, it does not carry forward, and once the tax year ends, that unused allowance is gone forever. So every April 6th is basically a reset and a new chance to protect more of your savings from tax. But why is this year slightly different? Well, this year's a bit more important than the usual because the rules of the cash ISAs are changing in the very much near future, especially in the autumn budget. That was announced that the cash ISA rule limit is going to be dropping down from £20,000 to £12,000. Because at the minute, we can put £20,000 full into the cash ISA. But from 2027, the maximum you can put in your cash ISAs will only drop to £12,000 per year. And this change is expected to apply to people under the age of 65 as well. The idea behind this change is to encourage more people to invest instead of keeping everything in cash. But not everyone wants to take investment risk, and for some people, cash savings are a safer option, which I can totally understand, because a lot of people still like to prefer cash, and I think because so far a lot of people, including businesses, are going cashless, I think the government's just gone, you know what, we're just going to make sure that the cash ISIS is also going to drop too, because we want people to be more digital. But there's still a lot of people, including around my age, that still prefer cash. So for the next couple of years, the tax years have been one of the best because you could use the full £20,000 in your cash ISA. But unfortunately, this looks like it's going to be the last year to do so, especially with the limit dropping to £12,000. So why in some cases can the cash ISA be useful? Well, especially right now, the cash ISAs are actually very useful. The one reason is that interest rates are currently much higher than they were a few years ago, which means savings account are finally paying a decent return again. Some of the main benefits are strong interest rates compared to the past, predictable returns, no stock market risk, and tax-free growth. Unlike investing, your balance doesn't go up and down every day. The money you put in stays the same, and the interest just builds on top of it, which makes the cash houses very much good for short-term goals or for people who prefer stability over risk. So who should consider a cash ISA? Well, cash ISA is not always the best option for everyone, but they can be perfect in certain situations. For example, like myself, getting ready to save to do my first time of buying a house. So, for example, if you're saving for a house deposit, you probably don't want to risk that money going to go down in the stock market because, if your money goes down in the market, you're going to have less money to go towards buying your first house. So if you put it in a cash ISA, you're only going to keep the money that you put in plus the interest that you get from putting into that ISA, which is very good for me. Emergency funds as well, especially with my faulty car sometimes, I like to keep some money in emergency funds. So money you might need very quickly should usually be kept somewhere safe and easy to access, and especially with the good interest rates on Trading 212, which I will cover in a second. I like to keep my money in there. And retirees. So when you're older, protecting your savings can be very much more important than growing it very quickly because you want to enjoy yourself. You want to go and see what life is, especially once you're retired from work, because you've got so much time on your hands. But if you put it in the market, you don't want to be waking up all day and lose 50% of it. So that's why a lot of people put it in a cash ISA, because the stability of it is more valuable than chasing higher returns. So what is a cash ISA versus a savings account? Well, a lot of people ask why they should use a cash ISA instead of a normal savings account. At first look, they look very similar, but the difference shows once your savings get bigger. With a normal savings account, the interest you can earn become very much taxable, depending on your income. For example, if you had £40,000 saved and earned interest, you might have to pay around £120 in tax in 1 year. But with the cash ISA, like I said earlier, the interest is tax-free, withdrawals are tax-free, and you don't need to report anything. So over a few years, the tax savings can really add up, especially if the interest rates stay high. So about the other ISA products, because the cash ISA are only not just the only type of ISA. There's another very popular option, which is the stock and shares ISA, in which I mentioned earlier, I do use both. So instead of saving cash, your money is also invested in things like shares, funds, ETFs, and bonds. This means you can get higher returns over the long term. But this is also more risk because the market can go up and down. Generally, the cash ISA equals a safer, better for short term, where stocks and shares ISA is riskier but better for long term. Like I say, a lot of people actually use both, which can be very much a good balance between safety and growth. And as I mentioned, Trading 212 and Robinhood do have a stock and share ISAs. They're like platforms that do offer trading with zero commission invested with no account fees, which are very good. Like I say, these funds and these platforms allow you to do shares, funds, ETFs inside the ISA, which means any profit is also tax free. I'm going to put links in the description where you'll be able to sign up to get free shares on Robinhood. And if you do want to go on Trading 212, you can open an account with Trading 212 today. But just please remember, investing always comes with risk, so make sure you understand what you're doing before putting your money in. So to quickly summarise, April 6 gives you a new 20,000 ISA allowance. Cash ISAs let you save money tax-free. The rules are changing in 2027, and choosing the right ISA depends on your goals. But if you want safety, cash can be great. If you want long-term growth, investing might be better. But like I say, many people use both. But thank you for watching, and I'll see you on the next one. And if you did enjoy, leave a like, hit the subscribe button, and I'll see you on the next one. Bye!